Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we'll be going over AT&T's announced merger / spinoff with Discovery. So let's get into it. All right, so for today's video, we're going to be looking at the spinoff news. I'm going to go over some of the details within it. I'm going to look at what Warner Media plus Discovery could look like in the future, as well as what remains of AT&T after Warner Media is spun off out of the business. If you're new to my channel, I do stock analysis as well as general personal finance topics, so please consider subscribing. Also, like the video at any time if you like it. Now, to the content. All right, so AT&T is going to spin off Warner Media, and that is going to immediately merge with Discovery Communications. Now, AT&T is supposed to receive $43 million out of that arrangement. The ownership of the new company is going to be split 71 to AT&T shareholders and Discovery holders at 29%. The way they've structured it, the transaction should be tax-free to the shareholders, and this is also a very important thing to note is that it's going to close in mid-2022. So as we get closer to that date, we'll get more details on how much what the ratio is for AT&T shares to a percentage. Like, is it going to be one share for every 10 AT&T, or what is the ratio of for each type of shareholder, AT&T shareholders and Discovery shareholders? The other thing I think you want to pay attention to is in the couple days so far, a few days since this has been announced, there's been some wild swings within both Discovery and AT&T. So again, I do expect some volatility until we get some more details on what the companies will look like post. But in this analysis / kind of me doing some research on it, I'm hoping to kind of shed a light on what I believe these companies are going to look like post spinoff and merger. All right, so when we look at the Warner Media plus Discovery, they did release within the guidance that they would have 2023 revenue of $52 billion. If we look at that EBITDA, they're estimated it's going to be at $14 billion. I did some rough calculation. $4 billion of that is coming from Discovery. $10 billion roughly is coming from Warner Media. That's my rough calculations I did when I looked at both of their cash flow statements as income, their balance sheets as well. When we look at synergies, I think it's going to generate $3 billion in annual synergies. So that's one plus there. And then when I did some rough calculations based off of a PE ratio of 22, I did some rough calculations that said roughly the market cap currently could be at $56 billion. Hey, you made it this far. Please like the video. It helps me out a lot with the algorithm. Thanks so much for watching. Back to the content. So the way I got that $56 billion is I really took Warner Media, who is generating about, in 2019 this is, we had the issues in 2020 with movie theaters and really production studios across the board. So they were down, but in the recent quarter, they were back in that $8.2 billion range. So in 2019, they generated about $8 billion a quarter. Off of that, their EBITDA was sitting around 2.5 per quarter. So that's where I got that 10 billion of the EBITDA is going to be from Warner Media. And if you look at currently EBITDA out of Discovery, that's at 4. So it just makes sense. Add the two together, that generates 14. Now, the thing that I thought was interesting, that means there's going to be no growth between now and when the business closes in mid-2022. So I don't think that's accounting for growth. And so when I got that market cap, I basically just used a multiple of 22 to get to that. And I think that's fairly conservative. And honestly, 56 billion. Discovery is at 16 billion market cap on its own. And they're only at $4 billion of EBITDA. They're adding, 2.5 times that. So I think, you could see that get much higher. Let's move on to AT&T's post-spinoff financials. Now, their revenue is going to take a pretty big hit. Like I said, Warner Media is generating about $8 billion a quarter. And so that's going to bring them from about $181 billion. This is, for again, 2019 numbers, $181 billion down to $147 billion. And from a free cash flow perspective, I calculate that's going to take them from about $27 billion down to about $20 billion. And then the payout ratio right now where it's sitting is about 56. And in the future, it's going to be in that 40 to 43%, which if you are a dividend investor, that's pretty disheartening to see. But you do get a portion of the Discovery, which has, I think, more growth opportunities we'll discuss later. And I honestly don't feel like there's going to be a dividend on that. I could be wrong, but we'll have to wait and see until further information is released about the new company and what they expect. So more information could be coming on that. I'm sure I'll release another video as more details come out. So the next thing I really want to talk about is the spinoff is really taking all the growth. So AT&T, if you watch my stock analysis about a month ago, I'll link it in the description. But I was really focusing on HBO Max. And if HBO Max is not there, they're going to have strong cash flow. I don't have any worries about the business, although their cable business is going to continue to lose money. That's just the way it is. But their HBO Max and their Warner Media side really provided most of the growth opportunity for AT&T. And so with that being said, AT&T's multiple may take a small hit. However, they are still going to have strong cash flow. But because they are taking off a portion of the revenue and free cash flow with it, they're going to have to cut their dividend. I think this might not be it may not be a terrible thing for AT&T. I did decide to sell my shares because as I mentioned in the previous video, I own AT&T as basically a bond replacement with the 7% dividend. If the 7% dividend is there, plus there is volatility in the stock, that does not seem like a good bond replacement to me. And so since this has materially changed, I don't want to see that moving much day to day. Whole reason why I bought AT&T is because I wanted it stable and a stable dividend. I don't like instability. At least that was not my intention with the money that I had in AT&T. So I sold the majority of that, about 90% of it, and I left a little bit left in there. And I don't plan on selling that piece. Now, what I think about the new company, so it traded up to about $34. I think that was pre-market, and then it dropped down into the $31 range, and then it went down into the $29 range where I think it's currently trading as I speak. I may consider buying AT&T again at $27. I think that is based off of what I believe currently, it might be a good buy at $27, especially because you're still getting a portion of the Discovery and HBO Max as that spins off. So that's really not that bad of a deal, in my opinion. So if it does continue to drop, I may consider getting back into it. But I just want to reflect back on what I said on April 13th. So everybody kind of understands that, it did hit $32 as I expected in the next 12 months. And actually, in the next month, which is a little surprising. I didn't expect it to move up that quick into the $32 range, but it did. It traded pre-market at $34 before when the merger was announced. That was honestly, I didn't move fast enough and I didn't sell. Honestly, I was planning on selling at $34 just because that was on the high end of my price target, and I didn't think it would stay there very long, but I missed it. So kind of going back to that is I may consider buying again at 27 because I still think it may have some swings in between now and when it closes. Again, we got another year until that happens. So again, AT&T is still going to be there. They're still going to be generating a lot of cash until the merger happens. I believe the dividend will probably stay exactly where it's at. near that $7 or 7% dividend yield. So if you are a dividend investor, you at least have the dividend for another 9 to 12 months. So you have some time to make a decision. And if you don't make a decision, you'll probably have a dividend yield around the mid 4s to high 5, or mid 4s to 5% range, and you'll have a piece of Discovery. So if you don't like if there's no dividend with Discovery, you can probably sell it and then put that money into another dividend stock that you'd like to invest in. So that's kind of my thought process on if you are owning the stock, especially as a dividend. You probably shouldn't sell right now because they're going to still be paying the dividend, and you can always sell the spinoff later or AT&T later and put it into another. But AT&T's cash flows, especially if they're putting their payout ratio in the 40%, that's just going to bring their payout ratio even lower and make that dividend even more safer than it was before. So a lot to think about. Hopefully this information was useful. Thanks so much for watching today's video. Please like, subscribe. Let me know down in the comments what you think. My name's Frank Finance. Out.